All right, everyone, get ready because today we're diving headfirst into the world of cryptocurrency exchanges. It's kind of funny. We talk about crypto being the future of finance and all, but figuring out how to even get started can feel like navigating a maze, right? Well, that's what we're here for today, to clear things up. We're breaking down a fantastic article from Forbes Advisor India that really gets into the nitty-gritty of these exchanges so you can feel comfortable, confident making your way through this exciting, constantly changing world of crypto.
It's definitely a landscape ripe for exploration, especially with everything that's been happening in the industry lately.
Exactly. It's like every day there's a new headline about crypto, which honestly just makes me even more curious.
Yeah.
So let's start with the basics. What exactly is a cryptocurrency exchange? Our Forbes article compares them to traditional stock exchanges. Is that an accurate analogy?
Yeah, it's a good place to start, but there's some key differences. Think of it this way. Both types of exchanges essentially act as marketplaces, right? But instead of trading, say, Apple stock or government bonds, on a crypto exchange, you're buying and selling digital assets. Things like Bitcoin, Ethereum, and, well, a whole universe of altcoins.
Okay, makes sense so far, but there's got to be more to it than that, right? What makes these crypto exchanges unique? Like, how are they different from, say, just using my regular old brokerage account?
One word, decentralization. Remember, the whole idea behind crypto is this idea of cutting out the middleman.
Yeah.
Yeah? And, well, traditional financial institutions are pretty much the definition of a middleman. Crypto exchanges, on the other hand, are trying to disrupt that whole system. They often operate with very minimal oversight, which, as our article points out, can be both a good and a bad thing.
Ugh, there it is, the catch. Less oversight, more risk. It's a trade-off. I guess that's why choosing the right exchange is so crucial, doing your homework and all that. But before we get ahead of ourselves, maybe we could walk through like a typical transaction. Paint a picture for our listeners of what it actually looks like to use one of these platforms.
Absolutely, great idea. Let's say you're looking to, as they say, dip your toes into the crypto waters with a little bit of Bitcoin.
All right, I'm game. Let's say I'm ready to part with, hypothetically speaking, of course, like 10,000 INR.
Okay, so first things first, you need to choose an exchange. And this is where that due diligence our article emphasizes becomes really important. Don't just go with the first one you see on Google. Research is key here.
Okay, so let's say I've done my homework. I've read reviews, looked for any red flags. I've found my exchange. What's next?
Well, just like opening an account with a regular bank or financial institution, you'll probably need to go through a KYC process. Know your customer.
Right. KYC. It's interesting you mentioned that. I was actually just reading about how KYC and AML regulations are starting to impact the crypto world. So it's not a completely lawless frontier anymore.
Definitely not. As crypto becomes more mainstream, regulators are paying attention. But back to our transaction, KYC usually involves providing some basic information, verification documents, that sort of thing, just like when you have to upload your ID to use that online trading app.
Right, right. It's about making sure everything's above board.
Hmm.
So I've been KYC'd. What's next? Do I need to like wire money or something?
Most exchanges these days offer several different funding options. You can usually link your bank account, use a debit card, even deposit cryptocurrency if you already have some. They try to make it as user-friendly as possible.
That's a far cry from the image I had in my head, like shady back alley deals and coded messages. So I've got my account, it's funded, I'm ready to buy my Bitcoin. What happens now?
Now comes the exciting part. You just go to the trading section of your exchange, you find the Bitcoin pairing, which would probably be BTC/INR in your case, and then you simply place your order, specify the amount you want to buy, and the exchange's system will automatically match your order with someone who wants to sell.
And boom, just like that, I'm a Bitcoin owner. That's surprisingly easy, though I guess that's the whole point of these exchanges, right? Making crypto accessible.
Exactly. And they've done a great job simplifying things, really opening up crypto trading to everyone. But, and this is important, it's crucial to remember that not all exchanges are created equal.
Right. Our article mentioned that something about centralized and decentralized exchanges. I'll be honest, that's where I start to get a little lost.
No worries, it's a really common point of confusion. Let's break it down a bit. Centralized exchanges, or CEXs for short, are basically like the big traditional banks of the crypto world. They try to provide a familiar experience, sleek websites, 24/7 customer support, a wide variety of trading options, that kind of thing.
Got it. So convenience is the name of the game with these CEXs. But what's the trade-off? You said not all exchanges are created equal.
Right, the trade-off is control, or rather a lack of it. With a CEX, you're essentially trusting a third party with your assets. They hold your private keys, which if you're not familiar are basically like the digital passwords to your crypto.
Ah, okay. So that's where that whole not your keys, not your coins thing comes from. I can see why people are wary, especially after that FTX collapse. That whole situation really shook people's trust in those big centralized platforms.
Absolutely, and it highlights why it's so important to thoroughly vet any CEX before you entrust them with your crypto. Look for platforms with a solid track record on security, transparent operations, and strong regulatory compliance. Our Forbes article actually pointed out some red flags to watch out for, things like questionable ownership, a history of security breaches, or consistently negative user reviews.
Makes sense. You definitely want to do your due diligence. So if CEXs are like the big banks of crypto with all the good and bad that comes with that, what's the alternative?
Decentralized exchanges, or DXs. This is where things get really interesting on a technical level. DXs utilize blockchain technology and smart contracts to enable direct peer-to-peer trading. There's no central authority controlling your funds.
So it's kind of like making a trade directly with another person, but the blockchain acts as this neutral intermediary.
Exactly. And because you keep control of your private keys on a DX, you have complete ownership and control over your assets. It's decentralization in its purest form.
That sounds pretty empowering, but also a bit intimidating, if I'm being honest. Are DXs more complicated to use than CXs? What's the learning curve like for someone who's new to the crypto world?
There's definitely a learning curve, yes. DXs tend to be a bit less user-friendly, with more complex interfaces and not as much guidance throughout the process. But for many people, that trade-off is worth it for the added security and autonomy they offer.
So essentially, we've got two ends of a spectrum here. CEX is offering convenience, but maybe requiring a leap of faith. And then DX is offering control and security, but maybe needing a bit more technical know-how. Is there a middle ground between these two?
There is, and that's where hybrid exchanges come in. They're a growing trend in the crypto space and aim to combine the best of both worlds.
Okay, now that sounds intriguing. Tell me more about these hybrid exchanges. What are they all about?
Essentially, they aim to provide that same user-friendliness and range of features you see with the CEX. But with the added security and privacy benefits of a DX, you can think of them as a kind of bridge between the traditional financial system and this decentralized future of finance.
I like that, a bridge. That's a much friendlier image than I had in my head. But on a serious note, with all these different options, how does anyone even begin to choose the right exchange? What are the key factors people should consider?
Yeah, I can imagine it's easy to feel overwhelmed. There's a lot to wrap your head around.
Absolutely. It's like learning a new language almost. And speaking of language, that reminds me, we haven't even talked about customer support yet, especially in the crypto world where things move so fast. Having access to good customer support, people who are actually knowledgeable and responsive, that can be a lifesaver. Oh, that's a really good point. I didn't even think about that. So it's not just about the tech stuff, but also finding an exchange that, I don't know, that feels right for you. Like you feel comfortable reaching out for help if you need it.
Exactly. It's all about finding the right fit. And speaking of finding the right fit, this might be a good time to clarify something that often confuses people new to crypto: the difference between an exchange and a wallet.
Yes, our Forbes article touched on that, but I'll admit I'm still a little fuzzy on it. Could you walk us through that?
Sure, so think of it this way. An exchange is where you buy and sell your crypto, right? But it's not really designed for long-term storage. A wallet, on the other hand, is kind of like your personal digital vault. It's specifically built to securely store your crypto assets.
Okay, so let me see if I've got this straight. It's like I might go to a busy marketplace to buy something valuable, but I wouldn't walk around with it all day. I'd want to put it somewhere safe, keep it secure.
Exactly. The exchange is that bustling marketplace, and the wallet is your secure storage. And it's really important to understand that difference because it has a big impact on the security of your crypto.
That makes a lot of sense. It's amazing how much there is to learn about this space. And it makes me think about something else, this idea that the crypto world is always changing, always evolving, which our Forbes article really emphasized. What are your thoughts on that?
It's definitely one of the most exciting things about this space, but also one of the most challenging. You're constantly seeing new technologies pop up, new regulations, even entirely new types of crypto assets.
It's like every time I think I'm starting to get a handle on things, bam, something new comes along. It's exciting, but a little nerve-wracking too, if I'm being honest.
I get it. It definitely keeps you on your toes. And that's exactly why it's so important to keep learning, to stay curious. Don't be afraid to dig into the details, ask questions, and really stay informed about what's happening in the crypto world.
That's such a good point. It's not enough to just like jump on the bandwagon. You really have to be an active participant, understanding the technology, the risks, the potential, all of it.
Exactly. Knowledge really is power when it comes to crypto.
Couldn't agree more. Well, folks, there you have it. We took a deep dive into the world of cryptocurrency exchanges, starting with the basics and going all the way to how to choose the right platform for you. And hopefully, you're feeling a little more confident, a little more equipped to navigate this exciting and, yes, sometimes overwhelming world of crypto. And remember, if you're ever feeling lost or just want to stay updated, you know where to find us. We're always here, ready to break it all down and help make sense of this ever changing world. Until next time, happy trading, everyone.